Welcome to Yadnya Investment Academy. When we started with our fund analysis videos, a lot of people wanted to know what a benchmark and a category mean. And in this video, we are going to talk about the same. Whenever you're trying to gauge whether a fund is good enough to invest in or stay invested, it's a good idea to compare it with its peers. But if you have a reference point to compare it against, you can be sure that your fund is good enough. Now, this reference point is nothing but a benchmark. Now, you cannot compare equity mutual funds with debt mutual funds. Equity mutual funds are for aggressive investors, whereas debt mutual funds are for conservative investors. Equity can give you returns of around 11 to 15%, whereas debt can give you returns of around 7 to 9%. Now, equity, debt, balanced, gold, etc. These are very broader classifications. When you look at equity itself, there are large cap funds, multi-cap, small cap, sector specific like pharma, technology, banking. If you look at hybrid funds, there are debt-oriented, equity-oriented hybrid funds. If you look at debt, there are liquid, ultra short-term, dynamic, credit opportunities, etc. The underlying securities and the proportion in which they are bought is what defines a fund category. And so you can expect similar returns from two funds that fall into the same fund category. Let us take an example to see how a fund is compared with its benchmark. In our example, the fund is HDFC Midcap Opportunities Fund. We are comparing it with its benchmark, which is Nifty Free Float Midcap 100. Now, the category in which this fund falls is equity midcap. When you compare two funds, just be sure that they fall into the same fund category. We don't think you should compare your fund with the category returns or risk return parameters. Why? Because the category values would be an average of all the funds in that particular category, which would include the best performing, the least performing. And so it is better to compare your fund with the top 5 funds within the category rather than comparing it with the values of the category. So let us move ahead. The beta value of the fund is 1, that is, it is perfectly in line with the benchmark, that is Nifty Free Float Midcap 100. And if we check all the other parameters, the fund beats its benchmark on 3-year trailing returns, PE ratio, standard deviation, alpha, Sharpe ratio. So you see, in one shot, you're sure that your fund is definitely doing good. But this performance has to be consistent. And now that you know your fund is beating its benchmark, you can go ahead and compare it with its peers. Now you must be thinking, why should I compare my fund with Nifty Free Float Midcap 100? Can't I go for a simpler index like the Nifty or the Sensex? Because Nifty is just made of 50 stocks, whereas Sensex is made of just 30 stocks. An equity mutual fund on an average holds around 80 stocks. Comparing 80 stocks with just 50 or 30 stocks would not be fair. You need a broader index. So various indices exist which suit various categories. You can find such a list on Nifty or Sensex website. Also, since 2012, SEBI has made it mandatory for mutual funds to declare the index they are benchmarked against. So the next time you see an ad where the fund is boasting about the kind of returns it has earned for its investors, just compare the returns against its benchmark and you would know whether the claim holds some water or no. Friends, hope you now know what a benchmark and a category is and how to use these when you analyze your fund for the next time. Thanks for watching this video. Watch this space for more such topics. Until then, happy investing. If you have any questions, let us know in the comment section below our videos. And if you like our videos, please do subscribe. Thank you.